All right, guys. So let's get started with the second official J&M podcast. So let's sit back, relax. We'll chat a little bit, talk a little news. We are joined today with our special guest, Juicy, over here. And then we're also going to be talking a little bit with JW. We asked him some questions. He said he won't be able to show up because he might be in a meeting. And so we're going to talk a little bit about his responses as well and see if we can get a little insight specifically into how he manages trading, his trading strategies, and how he looked at this week in whole since he was managing the official trade alerts. With that being said, we're going to split our sections up. We're going to talk a little bit about news at first. We'll probably handle our interviews towards the middle, and then towards the end is where we'll spend a little time talking about our Q&A. Specifically, any questions that members have asked us throughout the week that we think might be interesting to talk about in a little more detail. And also anyone who's used that channel at the J&M Podcast to kind of talk a little bit more about what they wanted to hear and, specifically what they wanted to hear from us. So this week, we're talking about a week here that's been pretty choppy. And if we try to look specifically at where we started versus where we ended off, you can kind of see that we're still stuck in this range aside from this very recent and kind of sharp bounces that we've been experiencing. A lot of our momentum that was gained on Monday during that tech rebound has just been lost. And we're seeing a lot of sell-off here as SPY trades now lower towards 331. Really, we got to see where we go along this level, this 330 level specifically, so that we can kind of gain some expectations about what's going to happen on Monday. With that being said, I am looking forward to a small pullback and bounce higher. I am bullish going over the weekend, but I do have all of my positions hedged. And so, really we have to see what we're looking at. This daily candle here closed after bouncing off a little higher. So really, within this range now is when I'm kind of expecting to see some momentum going into next week. What do we have on our news topics? Well, we've been looking specifically at a couple of high interest tickers throughout the week, a couple of stocks that have been, very prominently displayed on both media and news and also in the group. So right off the bat, we have Tesla, which has just been performing amazingly here. And we're also going to talk a little bit about Oracle. And we're also going to spend some time talking about some other high interest stocks that have been kind of talked about throughout the group. So let's talk a little bit about Tesla, man. Tesla here has been looking very strong as we kind of get here to the exit of our larger flag, our larger pennant here. And we're kind of seeing where Tesla is. We do have a little bit of resistance here at the 450 level. Tesla has been struggling. We did have a red pin today on the daily, but that was expected as shown in JW's charting and analysis that was provided to all of our members. And so I really like that chart because it's very straightforward, and also the simplicity kind of allows us to measure our expectations for this upcoming move. Now, I think this movement on Monday into Battery Day on Tuesday of next week, so as just a reminder, that is on Tuesday the 22nd, should be bullish. And so, if you bought the dip today and you're holding it, we should be seeing a movement above 450. I would like to see a close on there on some of the longer time frames. And then we're going to kind of pay attention to what Elon has in store for us on Battery Day. Really, we're looking for that high capacity battery. We're looking specifically for where we can go in terms of the future of battery technology for Tesla. And that's something that we're going to see, I think, get a lot of insight into that progress that the battery team over at Tesla has been making. Someone asked what chart am I looking at? I'm looking specifically at the ones in the Discord. So I mean, this is one that Hovan shared where we can kind of see our measured move here of our exit on this flag. But originally, the one I was talking about was the one that JW shared a little bit higher here, where we're kind of paying attention to specifically these levels and also our expectations for exiting out of this flag. Now, there was a smaller flag set up in here. Remember, JW initially was able to identify this as a bear flag at the very bottom of this pennant. But upon that retrace and then bounce off these higher levels here, and that's now where we're looking at to kind of see what our next targets could be here as we do try to exit here. What time is battery day? I actually don't know. So if anyone knows, feel free to chime in. What time the conference announcement is. Looking here.
It says on the 22nd at 1:30 Pacific time, so 3:30 Central, or sorry, 3:30 Eastern.
Okay, so towards the latter half of the day. So what we'll probably see then is some real last minute movements as that's getting started going into Wednesday. So that's going to be a very interesting day to trade Tesla here. I do think there's going to be a lot of opportunity on scalps here, not only from now, but any long positions that you might have swung over the weekend. Me personally, I'm not holding anything shorter term than an October expiration here. I have some on the 9th, 16th, and 23rd in staggered positions, as well as the 500-540 spread that Hovan alerted the other day. I have a couple of those as well that I'm looking to hold past battery day to next week to see as we push past those 500 levels. Really, that's where we get our next targets. Yeah, so there's that one, and then we're looking at this over here. Specifically, the level that I'm looking at, and I don't know if you can see my cursor on the screen, but I'm looking at these last 3 candles above that trend line where we want to see Tesla not only break above this downtrend, this limit on the upper side of the pennant, but also above those previous levels of rejection. What we got here? We got, look, some more info on the shareholder meeting and battery day event. Do you think it's a good idea to keep the stock after battery day? Of course. I'm very bullish on Tesla from here. I recently added on some shares back at the 330 level, and I'm expecting us as we break over the 500 level to continue running up. There's a lot of expectation priced into the battery day announcements here. So we really need to see some news that's going to be on par with our expected movement, and we can see some volatility increasing moving up to that. Specifically, any downside on Tesla is going to happen after that meeting, and it's going to happen pretty quickly if our news announcements aren't up to par. We're going to see that very quickly, and that's something where, you know, if you don't feel comfortable swinging into Wednesday past the battery day, then you might want to take profits on Monday, Tuesday. It very well could be a sell the news event if we don't see the type of announcements that the market is expecting. And so, like we're saying, that million-mile battery and things of that nature, we're trying to see milestones. We're trying to see things being released that are going to have a outstanding long impact on the profitability of Tesla overall. And so any major on this is going to have large implications in not only the pricing of Tesla, but also in its ability to continue expanding range.
So would you, I guess, for traders that aren't comfortable with swinging past Tuesday, would it be safe to say kind of treat it like a ER run up?
Oh, absolutely. And that's something that I'm going to be paying attention to specifically where we're trying to see this expansion here on Tesla, where I'm seeing a lot of calls and also a lot of puts retaining value on a lot of the volatility that happened today. As Tesla kind of chopped around, there wasn't a whole lot of value movement being lost up on that call side. Obviously, some of the strikes that I'm looking at are a little farther out in expiration, but that's generally pricing in some more upside movement if we're seeing those premiums holding anytime there's a short put pullback. I
Yeah,
would
I'm
say
looking at, oh, go ahead.
definitely something to be treated like an earnings where we can have a similar expectation for a very large breakout movement. And especially with the formation of the pennant here, we're getting to the exit very soon. And that's not a coincidence.
Yeah, and even if you look at flow for today, I mean, it was significantly on the call side for Tesla as well. Um, Most active calls was around what, 43 million in value versus just 8.6 on the put side. This is me using black box.
Absolutely. And so for anyone who's not familiar with Blackbox, Blackbox is a flow service that provides insight into large purchases or blocks of not only options but dark pool prints, shares, and things of that nature, where you can kind of get some more insight into where the big buyers are placing their money. And to expand on what you were saying, we do have a lot of bullish flow that's been leading into this. Not even today, but just previous to that, where we were seeing, a lot of longer dated flow getting added in as battery day plays. I don't know. I don't know. We have a lot of expectations here. Uh, Definitely something highly anticipated. I think almost everyone in the group here has some form of Tesla trade, or if not, they've been paying attention to it. And I imagine that stays true across a lot of the retail sector. So we gotta keep a close watch on here. Like Elon said when he tweeted the other day, was it last week? He said many exciting things to be unveiled, and that's true. I'm excited.
Yeah, I'm excited as well. And I think it's different from the Apple event with what they released because Apple's news was kind of already out. So it was kind of already price built in um,
Right.
leading up to the event. Whereas Tesla, I mean, it's a question mark every time.
Absolutely. And I would say if we wanted to take a moment to kind of compare the two announcements, um, a lot of the Apple news was already leaked, already priced in, and the expectations, right? So the results of these products being released, namely, the cheaper iPad and the new Apple Watch and announcements to improvements along the iOS ecosystem as well as the Apple Watch OS. All of those things were not only expected but leaked, priced in pretty much, and they're also not going to be moving a large amount of volume. They're not going to be, absolutely essential to the profitability or longevity in Apple's ecosystem, right? That's where we're looking for iPhone announcements and things of that nature where we can kind of see real price driven Apple. You remember during the day of that announcement, one of the things I was saying pretty much is that it's all been priced in, right? All of this news, nothing is going to have a positive effect on the Apple price movement unless there was some sort of surprise announcement. And so that's something that I was looking at for the Apple recording, right? I was watching that. And specifically, I'm looking to see if they have any type of additional value being added during that newscast, right? I forget what Apple calls their presentations or PowerPoints. and any type of insight into a new product sector or a new, redesign of the iPhone, anything of those natures that would be uh, very good to announce, really good on the sentiment. And we didn't have any of that. For example, I think one of the things that I was talking about with some of the group members is seeing if we can get some type of news on Apple's AR development. Right? And specifically, we've been seeing Apple, spending a lot of time and investing into AR technology. A lot of the newer products have depth sensors, such as the iPhone, iPad Pros, also have depth sensors. And so we're seeing how these new developments in AR can bring Apple into a new sector. And one of the things that we see with that specifically is that whenever Apple enters a sector, enters a new product into their lineup, they usually do so after it's been well established, well tested, and can be done so in a reliable and high quality manner consistent with Apple's, reputation. I think AR specifically is something that's been around for quite a while. And so that's something that I would like to see Apple kind of expand on or kind of bring some legitimacy, something tangible to all of these AR rumors that have been developing. Now, to bring that full circle and come back to Tesla, which you were talking about before, well, how does that announcement differ from the battery day announcements that we're expecting? Well, the key difference here is that the verification of the existence of the million-mile battery has a profound effect over Tesla's entire product chain, over their entire way of doing things. And so one of the things that we're looking at specifically is we're watching Tesla to see if these announcements on battery day can lead to actual profitable changes in their lineup, things that will affect the company going forward, things that are going to be pretty substantial. All right.
Sorry, I'm super late. I had a call run a little bit later than expected, but I'm on here now. So what are we talking about?
Hey, Simba, glad to have you. So right now, Juicy brought up a good point where we were comparing the differences between Tesla's battery day announcements that are coming up next week,
Yeah.
and also Apple's recent announcements from earlier this week, and the price effects that both of these announcements could have on either security.
So I guess we're discussing if Tesla's going to be a sell the news event or if we have any actual catalysts that can kind of pump us up, right?
Precisely. And so that's something that I am thinking is going to be different in nature because of just how big, these battery improvements can be.
Yeah. Well, the thing they're talking about is that million-mile battery, right? That they have patented, and I think they're the only ones who are going to have access to something like that.
Yes.
Absolutely. And having, an exclusive technology in a already competitive industry, one where they have the advantage, is just going to push them that much farther ahead of any competition.
Yeah.
Right. And so that's something that you wouldn't see for Apple, where generally those are seldom news events. But for Tesla, this is going to be pretty profound, depending on whether they can deliver on expectations.
Well, it's one of those things too, right? Where Apple has that market of where they sell to existing customers. Everybody either has a Samsung or a Google or an iPhone, right? So they're just upselling their iPhone products, while Tesla, on the other hand, is trying to get more people into the EV market. I think if you're looking at overall markets, Tesla has better access to more people who, aren't interested in EVs, or maybe this will be like the stepping stone for them to get into an electric vehicle.
Absolutely, absolutely. And as they continue to improve, both the reputation and reliability of their vehicles,
Yeah.
they can continue to take over larger and larger market share. Whereas, something like Apple, which is, in a mature market cycle right now, a very saturated market cycle, doesn't have the same room for growth, even though they are sustaining growth.
Mhm. So if we're looking at playing Tesla options, I feel like a lot of people in the Discord ended up swinging some calls over the weekend. Would that be a correct assessment?
I think so, absolutely. Like I was saying, I'm pretty sure if not everyone has some form of Tesla call,
Yeah.
then we've at least been thinking about getting into a Tesla position with how
Mhm.
much we're discussing it.
So I would look at playing it two different ways, right? I mean, we all remember the Cybertruck reveal where Tesla pumped, I think, that entire week leading up to the design, and then it just became a sell the news event and the price tanked right after. If you're looking for like a low capital investment with minimal risk, you could definitely buy some Tesla calls on Monday, right? Because the battery day is Tuesday, correct?
Hmm.
Yeah.
Right. And
So
so
you
checked in
you
the
could play
chat.
that pump on Monday.
Yeah. We just checked in the chat, and I think we got the conference starting at around 3:30 or 4:30 Eastern time. So right towards the end of the day on Tuesday. That
Ooh.
gives you 2 full market days to kind of play this pump up.
And then we closed at what, 4:43 today? I haven't looked at the after hours action to see if anything had really happened. But that is a super viable strategy. If you just play the run up into the news and then sell, that to me seems like easy profits. I think you're sort of gambling if you try to ride it into battery day. But if you have the capital to risk, I mean, I think that's solid as well. Because Elon's been tweeting that the news is going to be insane, right?
Absolutely. And so, not only is he pumping up our expectations, but he's also pumping up our, premium prices over here, trying to
Yeah.
get the run up started a little ahead of time.
So I guess I haven't really looked at any of the contracts for next week on Tesla, but I would go out and say that there's probably significant volume on that 500 call for next Friday.
I would say so. I mean, I had a 450 call for today,
Yeah.
and that kind of shot up this morning. I would say the 500 calls are only going to get more expensive from here,
Yeah.
especially as our implied range kind of starts to expand to include those levels, right?
Yeah.
We're kind of pricing in the movement above 500 here. We're going to see those out of the money contracts start to get a little more expensive
Mm.
if they haven't started to already.
Those 500 calls for next week are heavy in volume, almost 35,000
Oh, wow.
compared to, so the other one next to it would be the 450, and that's at 23.9.
Yeah.
So yeah, I think we'll see more volume come in for those, and then there will be some reaches for the 550 as well.
So just in your guys' opinion, what do you think Tesla has the possibility to close the week out on next week? Because I mean, if we're all on the same page that we're going to see that pump Monday and Tuesday leading up into battery day, that means that tech should mostly rally first 2 days, right? And then I guess depending on how well battery day is, it could push the overall market forward, maybe.
I mean, I don't know if we can see that profound of an effect across other tech companies,
Yeah.
but what we can see is that Tesla does have the buying pressure sufficient enough right now because of the interest that is around buying battery day
Yeah.
to withstand any market downside. And so, we're seeing Tesla close up nearly 5% on what otherwise was a pretty choppy and just overall, kind of lackluster day in other sectors of the market.
Yeah.
So regardless of what happens, I think we can easily see, a movement over the 500. I'd want us to see a close above that on the daily specifically.
Yeah.
on some higher volume. So I don't have a daily. Maybe just pull up a daily. Right. Where we have that high of 502. We're testing here at the 450s, 460s right now.
Yeah.
We want to clear both of those levels, and then I think it's takeoff from there. It could easily touch, even higher than that.
Yeah. I would have felt significantly more comfortable swinging Tesla calls if we had gotten that Tesla above 450 today. If we were able to hold it, I mean, we did cross it, but then everything sort of sold off at the last 5 minutes. Apple and Tesla both taking a hit there.
Yeah, absolutely. And that's just probably some risk off towards the weekend. There's a lot of macro news that is kind of being thrown around in terms of just COVID numbers, COVID related, vaccines, any type of deal for relief. All of that's kind of becoming a little more around. And so I think we're kind of seeing this like patience in the market, I want to say, where we have this chop. We do have a lot of, movement in the ranges on these dailies. But aside from that, we're not really moving anywhere with conviction. I mean, if I'm just looking at the S&P futures right now, we're closed at minus 33 points, which, while that's a decent amount, isn't anything that I would expect for the type of movement. So specifically this week as a whole, I think was definitely range bound, and we should see some things pick up next week.
The difference between this type of chop that we're seeing and what we saw back in like April or May, this chop is kind of profitable. Like you're seeing 5-point swings on the S&P like every day, right? So
Absolutely.
you could short the rip and buy the dip in the same day and profit.
Oh, I agree completely. And that's the thing, is that the market sentiment here is, obviously we're trying to get some momentum in a direction. We have this pullback on tech that's been kind of draining us all week.
Yeah.
And aside from that, aside from losing 1100 today on the Nasdaq, I am kind of, trying to see where we can get some more movement past these $5 days, where we kind of start to see some, real movement to either the upside or the downside.
Yeah. The last time on the Power Hour chat when Juicy and I talked I wasn't bullish fully until above 442, but I don't think we're going to be able to get there and hold it unless we get some other kind of like external catalyst. So that stimulus deal is going to be one of them, the COVID relief. And then after that, I don't know what it would be. I guess vaccine news, but I'm starting to see a lot of pushback in the media on, are we rushing the vaccine? Is it just for the markets? Is it legitimate?
I think it'd be election after stimulus, in my opinion, that would either heavily pull back or push above.
Absolutely. And like I said, that's why we're waiting kind of on some decisions on the macro end where we can kind of see some, real movement on the market as a result of that. Right. I think we're kind of in this waiting phase at the moment to kind of see exactly where our future range is.
And to go back to Tesla, even them pumping, I don't know if they're going to bring tech along with them.
Yeah.
That's one thing that I wouldn't really bank on, is even if because even if you look at today, kind of Tesla just kind of moved on its own, where other tech was pretty bad for the most part.
Yeah.
I mean, aside from Zoom, Facebook fell below the 465 level or 455 level that Jackson was talking about. Nvidia kind of slow chop down as well. Apple, same thing. So I think Tesla's kind of like its own free runner right now as far as going into battery day.
Yeah. I could see that happening, but I would hope that at least Apple or some of the other, I guess, momentum Robinhood stocks also kind of pump. This week we had Monday and Tuesday where we were fairly green and the market was pumping, right? And then we didn't start seeing a significant sell-off until Wednesday.
Yeah,
Right.
Monday, Tuesday it was like a rally-ish.
Yeah.
We had a strong rebound, and tech was actually green on Monday for a large part, where we kind of saw this really strong movement. And then that faded very quickly Tuesday into Wednesday, following the FOMC meetings.
Yeah.
Kind of, I guess, waiting for the results of that. We kind of saw some stagnation in the tech sector, and then eventually we did have that die-off Wednesday going into Thursday morning, following
From
the
my perspective,
following results.
yeah. So what I was going to say is just from my perspective, I want to lean towards buying the dip here to try to capture that Monday and Tuesday rally if we are going that route leading into possibly Tesla bringing up the whole market. But what I've kind of seen is if you're shorting any of the pops at market close, it would have been a profitable strategy Wednesday, Thursday, and Friday.
Oh, absolutely. And that's the thing, is that like there's money to be made on both ends, even during this kind of range bound trading. You just got to be on the right side of it.
Yeah. So as far as what you guys have covered before my late ass jumped in here, how did we do?
Just Tesla, pretty much.
Oh, really?
Yeah, pretty much. So you didn't miss much. We've mostly been talking about Battery Day and our expectations for next week, especially with Tesla's close today.
Okay. Well, where do we want to go from here?
Well, I did mention, we had a couple of other news things that we wanted to cover.
Okay.
So we can kind of switch lanes real quick and talk over on the Oracle and TikTok side of things.
Yes, as far as that goes, it turned out to be a big nothing, looks like.
Yeah, and that's the thing is, did this, asset sale, did this entire TikTok deal actually, ever reach a point where the expectations were, in line with the actual value that this sale would have bought?
Yeah.
And so even going back to, I want to say maybe 2-3 weeks ago, when Microsoft was still the expected front runner on this deal, we saw some strong movement there on Microsoft, and we kind of saw that fade as we received news that Microsoft wasn't really going to be taking over on that end of the deal. We saw things like Walmart experiencing a rapid pump after it announced that it was also in the bid as well for a joint partnership with Microsoft. But did these movements correspond to, the actual value that this deal would have brought?
I don't think so. If you're looking on the day that announcement was made, we did have that pump up to that 62 level, but that entire day was, I want to say at least 30% of those gains were sold off, right? And it's been holding around that 59 level, but it's had some lows. I think what people were expecting was a full sale of TikTok, right? They weren't expecting just the partnership on the cloud side. That's why I don't think we saw a similar effect that like Microsoft and Walmart got. Because when they announced that Walmart partnership, Walmart ramped 10 points in one trading day, right?
Absolutely. And that's the thing, is that even now, this deal is kind of dead in the water, specifically because I think the most profitable or the most valuable asset in that deal, which is the IP, has been completely taken off the table.
Yeah.
Right. And so what we're looking at now is a sale of assets that, I don't know if you can really act upon them if you don't have access to this IP, if you don't have access to the algorithms and actual, essentials that are creating this platform or running the platform, right? And
Juicy, what do you think?
I'm sorry?
I
Juicy,
think that, like, overall, I mean, the whole TikTok thing was just, I mean, now looking back at it, I mean, every company that was involved one way or another is down at least 15%
yeah,
since from the actual trading day or of the news break. Couple things I was reading was TikTok potentially IPOing. That was one of the things on my news feed, and if I find it, I'll send it over to you guys as well. But as far as Oracle just being the cloud partner, I don't see value for Oracle's revenues long term through TikTok.
no, it does feel like sort of a half-ass deal because it goes with what Trump was saying initially, where he wants American cybersecurity, make sure the data doesn't get into the hands of China. But I don't think that's what he's going after. I think kind of like Chris was leaning towards that they want the IP, right? They don't want to lose a huge social media platform to China. And then they also have that access to Americans' data. But if you look at it, Facebook has access to all of our data, and they've been hacked, 15, 16 times. So I don't think that data argument is the real catalyst for the sale. I think it's the US just wants the IP.
Yeah, I think US is just trying to take whatever they can from China, honestly, in my opinion.
So what do you guys think about the outcome? Do you think that TikTok is going to get banned in the US?
Well, it's kind of hard to say. And, I think a really big part of this is that fact that Trump wants to seal a deal regardless of what happens. And so at this point in time, even if his only, success is being able to get Oracle partnered in on the cloud end of things,
Yeah.
He's going to chalk that up to a win when really it's not necessarily what we initially, the terms we initially laid out for that partnership. And so, like, going forward, I think, TikTok won't be banned, but I also don't think, like you guys are saying, that this is going to be anything substantial for the companies involved. And just looking back, something that I kind of want to compare this to is Snapchat. And back when Snapchat was, up and running and the premier newest social media platform,
Yeah.
saw a lot of expectation for upside. We saw a lot of demand for, whether that was, collaborations with Snapchat, different types of strategic partnerships with Snapchat. And at the time, there was a lot of buzz for their IPO as well.
Yeah.
One of the things that we're seeing is that as a result of that, not only has Snapchat had trouble being able to become profitable on a long-term basis,
Yeah.
but we're also seeing that their stock price, aside from the current flag that's happening, has been pretty level, pretty stagnant. And I think that kind of lines up my expectation for TikTok as well, where it's kind of this platform that right now does have a tremendous, potential for its future, revenue, for its longevity, but they might not be able to capitalize on that.
I kind of agree with what you're saying. It reminds me of when I think Twitter bought Vine, and then Vine was expected to be this whole life-changing big thing, right? And what's that clicking?
Oh, sorry, that's my work timer.
Oh, you're good, dude. Yeah, so when Twitter bought Vine, Vine was expected to take over and it was going to be the new YouTube and all this stuff and a huge social media thing, and it just died. I think TikTok could fall into that fad category, because
Absolutely.
like when you were talking about Snapchat, one reason that Snapchat doesn't get the user base or the revenues from ads as much as you think they would is Facebook has a story system. Instagram has a story system. If you want to see what Snapchat does, you can see it on 2 other platforms. And then I think, what is that, Instagram Reels that just came out?
Correct.
Right? That's basically TikTok.
Right. And I mean, before TikTok was TikTok, there was Musical.ly, which was the precursor to the current platform. And so they took an idea that already existed. And if
Yeah.
we are looking at the development of these types of like social media platforms over time, what we're
Mhm.
kind of seeing is that it's essentially the same idea being repackaged every time. And so this is something that goes all the way back to Vine, where there was very short form video content, easily digestible. Um, and then from there we had other services, Musical.ly, for example, kind of take that short form content and then allow music to be dubbed over that.
Yeah.
And so that was where TikTok was kind of born from. And so it's not necessarily a new idea. It's just that they have captured the attention of, Gen Z, and they've captured a lot of attention of people who don't necessarily know about the platform, people who are not, technologically savvy, people who, could be boomers, for example,
Yeah.
might not use TikTok, but they hear about it a lot.
Yeah.
And it drums up not only interest in the company, but interest in any potential financial investments that could be made into the future of this company.
So
And
what they're looking at it kind of like, oh, this is the new hot thing that, applies to this generation, right?
Right. And that's the thing, is that I see a lot of people, whenever this happens, and it like Snapchat and now TikTok, whenever this happens, the expectation is that there is a large migration of the majority of social media users over to this new platform,
Yeah.
where essentially is going to take over. And that's this whole, excitement about it, is where people kind of say, this is going to be the new Facebook, or TikTok is going to be the new YouTube.
Yeah.
On the opposite end of that, we aren't seeing those types of numbers, right? Facebook is cemented, and people have been calling for its death for years now as a platform. For years now, people have been saying that it's going to die. But we're seeing the opposite of that, right? We're seeing new ways that Facebook continues to integrate itself into the social media market, and that keeps it from dying.
I think TikTok really needed to be acquired by somebody with a social media already presence in the
Yeah.
market. I don't think just any sort of tech company can just take it and revamp it, run ad revenue and grow revenue upon that platform.
Yeah.
Like Facebook bought Instagram, and Instagram's a huge revenue generator. Um, so as far as like the market goes, if there is a social media company, like if Twitter was to buy TikTok, then we
Yeah.
would see some more potential growth from Twitter through the TikTok side. But somebody like Microsoft or Oracle, for them to step out of what they're doing and go into social media ad revenue, it's a little bit different
Yeah,
in my
but I agree with what you're saying, but if you're looking at it from a trading perspective, so we've had 3 cases of this now, right? With Microsoft, Walmart, and then Oracle.
And there was one
Let's
more too. There was
what
one smaller company. If they're trading at around $11 or $12 a share.
yeah,
I think it was like WMS.
maybe.
It,
I feel like there were 4. But either way, if you're looking at it, every time one of these companies announces, we're gonna partner up with TikTok, we're gonna do this with TikTok, you get that initial pump, and then for like just looking at Twitter when they announced a possible thing, they pumped and then just sold off right after. So if you're playing the TikTok news, I think you go on the short side, to be honest with you. I think you play the initial bounce, and then is whatever it tops out at for the day, I think you short it down.
I mean, look at Microsoft, to expand on your example. They touched 230 and are
Yeah.
now at 2, right? And so that's a strong movement on both ends.
Yeah. And especially if you're looking at Walmart and Microsoft, those are 2 financially stable companies, right? I think they both pay out a dividend. I know Microsoft does. But yeah, that type of news brought in that volatility, pumped up all the contracts, and you were getting huge moves on 2 stable companies. So I think I think that's how you play the TikTok news moving forward. Does anybody think that it's actually going to go through with Oracle?
I think at this rate, yes, but I don't think in the manner people would like, right? I don't think it's going to be the type of deal that people are expecting or the type of revenue generating, partnership that's expected as well.
Yeah. What was Trump's deadline for the ban of TikTok if they don't go through with the IP sale?
It's supposed to be today.
Yeah, but didn't he extend it like a week or two out or something?
He was saying something about this weekend.
Huh. Well, I was gonna say I was hoping it was next Friday and I'd buy some puts on Oracle.
Oh, look at that. Well, I'm looking at a article today, September 18, 5:26 p.m. The Commerce Department on Friday has issued a sweeping order banning any transactions on TikTok and WeChat in the US.
No way.
Starting Monday. All right, so like you said, across the weekend, starting Monday,
Yeah.
TikTok and WeChat will be banned from app stores. Users will not be able to download the apps or receive updates if already installed.
Oh shit, it's going down.
So I guess we're seeing changes here. And that just came out about 20 minutes ago.
Oh,
Too late to
man.
buy puts?
Yeah, it's definitely too late to buy puts. We might be able to ride it down though. So what do you think from like a China TikTok perspective? Like what do they do? Do they cave in to the US government and try to push out some deal just to get that user base? Because I think initially, if the US ended up banning TikTok, I think India was going to as well, right?
I'm sure India would have. Trump and the prime minister in India are pretty good buddies, is
Yeah,
what I'll say.
that's got to be a tough like financial decision for them.
Oh, of course. Well, if you're looking for the company's goals here, ByteDance specifically needs the US exposure, the US audience to continue on this path, right? Without that, they lose a majority of the content creators and arguably the biggest names on TikTok, the biggest users on TikTok with the largest followings are
Yeah.
all US social media entertainers. And so if they lose that audience, they're just going to migrate to a new platform. And that's kind of that thing that you saw happen with Vine, where, Vine died and all of those entertainers, media creators just transitioned over to a new platform, whether that was YouTube or now TikTok.
So just to play devil's advocate, you brought up a point that I was going to bring up because I remember when Vine died, all those creators moved to YouTube. So who owns YouTube? That's Google?
Google.
So what are we thinking here? We're thinking some Google calls long term?
I think Google shares are better, just long term. Yeah.
It's tough. Google as an equity, as a security, just doesn't move the way, some of these more volatile companies do. It doesn't move quickly. And, it's definitely more of like a stable, blue chip type stock, definitely growth. And if you're also looking at Google, the parent company, Alphabet specifically,
Yeah.
and you look at the way they're set up, obviously now Alphabet has split off all of its holdings into smaller subsidiaries. But I think it was something crazy, like maybe 90% of their revenue was from Google, right?
Really?
Like the revenue generated from YouTube was a penny in comparison to revenue they generate from Google, and not only that, but the money they need to continue operating.
Wow. I didn't know that.
I didn't either. And it'd be interesting to actually look into it because YouTubers get paid per view. So like if YouTube's not a major revenue generator for them, where their AdSense is, then and the ad revenue is not being a part of the actual Alphabet, then I don't even know if it'd be a really good long-term play. I mean, as far as options go, they don't have as much volatility, so you
No,
do
they
get a
don't.
lot of chop and burn.
Yeah. But I mean, if you're looking at the 1 day right now on the year, it looks like if they continue downwards, they're going to end up hitting that 1347 level before any possible bounce. But you're looking at maybe seven days of just sell off. There might be a relief rally if tech does run a little bit there, because you saw a gap down from what, 1519 to 1470. So I would
I mean,
expect at least a little bit of a sympathy rally.
been pretty beat up recently.
Yeah. Like if you look at the RSI, you're looking at, let me see here.
Oh, and to go back to TikTok, one of the chatters, Chris, stated India already banned TikTok, which is true.
Oh, wow. So I didn't know that as well. So they lost that user base.
So then I guess the question is that provided this ban stays in effect and does go through, do we think that another company such as Instagram Reels is going to take over a large part of that user base, or do you guys think that another platform is going to pop up in?
I wouldn't say that there's going to be another platform. And the reason why is, do you guys remember that tech conference where they had Zuckerberg and Jeff Bezos and the dude from Google, and they were all talking about some of the issues and antitrust policies and all that? Zuckerberg is notorious for just buying companies that he thinks could even challenge Facebook, right?
Yes.
Because that was the deal with Instagram. And then the argument that he framed was, well, we gave them access to our user base and all this. But in reality, what you did is you killed a competitor before they got big enough to actually compete with you.
Right.
So I would lean on, if there is a competitor, I think one of these other social media platforms just snatches them up and just integrates their technology.
Right. And so I think something interesting to consider is that TikTok was able to grow to the size that it did, maybe because it was isolated from the US market in time one, where it's isolated from, these competitors in a way that allowed it them, up until now to operate independently of any of the big, companies.
Yeah, but it's also hard to predict trends that are going to take off like that, right? Because like you were saying, like that whole Musical.ly thing, like I barely remember Musical.ly. And then now that I'm thinking about it, it essentially was TikTok, right? So
Yeah.
I think it's just one of those timing things where TikTok showed up and whatever generation jumped into it and got a following. And then other people were like, hey, I can make money off the ads here, the subscribers, or however that works. And then it just blew up.
I know a lot of people obsessed with TikTok,
Yeah.
but like I've never downloaded the app. Only thing I remember from TikTok was watching YouTube videos where there were TikTok ads.
Yeah.
That's the only why I know about TikTok.
I downloaded TikTok because I have some boomer friends on Facebook who downloaded it. And then some of the stuff they post is hilarious. I'm just like, look, bro, you're too old for this. This is not a platform.
It's fine. One of the things I've seen, I also don't have the app downloaded, mostly because anytime something interesting happens, one of my friends sends it to me. So I can kind of appreciate content from there without actually needing the app. One of the things that happened recently that was quite interesting is that previous to all of this drama, in order to view a TikTok video that was generated on the platform, needed to have the app downloaded onto your device. Very recently, and I don't know how recently, TikTok has actually enabled the searching and viewing of videos on its site without needing the app.
Really?
Right. And I think that might be an attempt on their end to circumvent maybe some of the app restrictions. But previously, where you could not view content without the app, now you can.
So that's kind of playing on the whole, hey, look, you don't have to download our app and give us permissions to your data. You can just watch our content just on a web page.
I think so. And I think that was a smart decision. I don't know why it wasn't enabled. Well, I guess the argument is that it wasn't enabled in order to encourage more downloads.
Yeah.
And so now that that's not a possibility, you're trying to expand exposure on their site.
I mean, so that might actually not, the whole US and India ban might not affect them at all. You know, if they can still get views on whatever ad platform they're running their ads on by watching their videos, if you just need a web page to watch it, I mean, it should have the same effect. The only part of revenue that they would lose is they can't secretly sell your data, I guess.
Right. But I also don't think you can generate content without the app. And so that's the issue, is that you can view existing content, but I don't know if you can generate new content.
And with its ban in the US, I'm not sure how their revenues would take a hit either.
Yeah. How would that work? Like if you already have the app installed on your phone in the US, would it just tell you that it's blocked in your region?
I think
No
you
more
could
updates.
until the app gets outdated, right? So that you can use the app unless some kind of breaking update happens. And so there might be an incentive on their end to not update the app, to allow anyone who has it currently installed to continue to use it. I don't really know, but I'm sure there are some ways that they're definitely trying to kind of circumvent these restrictions.
I would imagine. I mean, I think there's probably people already looking into it on how to bypass a ban if a ban did go through. If that was my primary source of income and I was just making videos on TikTok, that would be the first thing I look at. It's how do I get out of this ban and keep making money?
Right. I mean, I'm sure it's pretty, I mean, you can, like, maybe you can change the region on your device, download the application, and then change the region back once it's been downloaded, something of that nature, maybe.
Like a VPN with your
VPN.
VPN, have the IP in a non-banned territory.
Yeah.
Possible.
Cool. All right. So I guess that's it for TikTok news. What else we got?
Interviews. So
Oh, okay.
our interviews for today. Obviously our first special guest is Juicy and our other is JW.
Where's JW?
I believe he's here in the chat. He said he was on a business meeting. So we did pre-ask him some questions in anticipation of him being unavailable. And so I do have his questions and answers here. And we can spend some time talking about that first if you guys want to start with him.
Yeah, I think that'd be easy.
Cool. All right, so here I'm actually just sending you over. You have it as well.
All right, cool.
Cool. All right, so basically, as everyone knows, JW had free reign over the Discord this week, and he was able to introduce a lot of our members to some more advanced trading strategies, more advanced trading styles. And you guys were definitely able to witness how someone who majorly trades multi-leg strategies manages an account of this size. Obviously, market conditions weren't ideal. We did have a very choppy and volatile week. So there was some difficulty in managing some of the positions. But overall, we ended up with a profitable week, and we did see some money generated as a result of these, either debit or credit strategies. So let's take it from question number one. So our first question for JW when we were looking was, we asked him what is his preference in the types of strategies he would use during this type of market, specifically when the market is chopping and not breaking to either side.
Yeah.
And JW was explaining that in choppy markets, obviously the quick thing to do, the easiest thing to do is take quick profits, right? That's the number one thing, is that if you feel the need to trade on a day that is primarily choppy with no clear direction, you don't want to sit in a position, right? His other advice was, if you want to limit risk off in these types of weeks, to just stay away from the market, right?
Yeah.
You don't need to trade every day. And I think that's something that we kind of mentioned to some members a couple of times this week too, where when you're experiencing what we did this week, sometimes the best thing to do is just sit out and wait for the right trade instead of trying to force a trade.
So I can touch on that as well. I think my least profitable month since I've started trading, since 2016, was in April or May, where we got that initial drop and then sort of a pump, and then the market didn't do anything, right? I lost probably more money to theta burn than I had made in 3 months before that. And that was where I was stubborn and I was trying to force positions. I had that goal in my mind where I was like, hey, I need to trade today. I need to make X amount of dollars or X amount of percent. And I would just try to force opportunities that weren't there. Or maybe there was an initial pump in the morning and then I would hold the position halfway through the day and just lose money on time. So that's actually a really good answer and a good way to look at it. If the opportunity isn't there and you're noticing the chop, just don't trade. If you don't trade, you can't lose any money.
Right. And that kind of goes back to, I think that's one of the things that before he left, Jovan tried to remind members is that the official trade account is a 25K account that so far has generated over $250,000 in profits.
Yeah.
But with that account, he's generally trading only, 2, 3, maybe 5 contracts at a time.
Yeah.
And that's most days. That's 90% of the time. There's maybe, positions that are 2%, 5% of the capital in the account. And when you're trading for longevity, it always becomes more profitable to wait for the scenario, right? To not force a trade, to take these smaller positions until the opportunity is right to take a larger position.
Yeah, it's one of those things too where Jovan's really good at maximizing momentum plays, right? Like we all know that Tesla exploded and you can see that he goes heavy and follows the momentum and flow on those. But with JW, what he was able to do this week is look for lower risk trades that had a higher chance of profitability with minimal capital, right? So if you know the market's going to chop, you're trying to play that range bound level. So you're looking at 2 different types of markets with Jovan and with JW trading.
Absolutely, I agree. And that's something where, your strategies have to adjust to the type of market you're trading, right? Where you can't employ the same strategies if the market's behaving the way it has this week.
Yeah, one thing that I looked at when I first started getting into advanced strategies was December of last year. I learned a lot about iron condors and iron butterflies, and I was just trying to play that lack of volatility. If that chop is there, then just try to profit on, price action not moving, staying between a certain range bound level. I kind of wish I'd remembered that when the post-COVID drop happened, but I guess I was being greedy and was trying to YOLO and make money.
Absolutely. I agree. I mean, it's hard to swap mindsets. And that's the thing that you really need to do if you want to be profitable in both ends of the market. And so that's one of those things where I'll give you an example. When I was starting off, I was very doubtful to pivot, or I would say I was very stubborn to pivot from bullish or bearish sentiment on a security.
Yeah.
And it's one of the ones where, people buy the dip until it keeps dipping, right? And you have to kind of get beyond that in order to be able to play both sides. And it's hard because on one end, you don't want to be too wishy-washy, right? You don't want to get stopped out at any chop or any fake drop. But at the same time, you don't want to be stubborn beyond, a very logical, exit signal. And so there's a balance in there. There's a balance in getting better at that.
And I think another thing is like more than just playing like being bullish or bearish. I think a lot of like new traders start getting too caught up into just a certain company or ticker, especially when we have something like this and they've had so much success in the past that they go back to that same ticker because they assume that they're going to be profitable with it just from their past results.
Yeah, I'm just generally a stubborn person, so me breaking the habit of buying the dip is very difficult. Like today, all day, I wanted to buy the dip on Apple and on Tesla and try to ride it up. And then into close, I inversed myself and I was like, you know what? I'm going to short the rip and see if I can profit a little bit. And I ended up scalping Tesla 445s and Apple 107.5s for, a couple bucks here and there. But that's one of those things where you have to break that habit if you don't have all of the aligned confirmation, right?
Right.
So you can make a case for buying the dip today because we've already lost so much. There's going to be a sympathy rally. But what other indicators are you seeing? What other patterns have you seen from like last Friday, or just every day we're heading into close, we see a bit of a pump and then there's a small sell-off.
Absolutely, I agree. I think that's one of those things where obviously you get better as you practice and you get better as you tend to become more familiar with the movements that you're trading, as you tend to become more familiar with the different securities that you're trading. And if you have a constant trading plan, a trading strategy that you can rely on,
Yeah.
once that becomes second nature, then being able to pivot in strategy is going to be easy.
Yeah, that's definitely right. All right.
And you want to ask him question number 2?
Yeah, I'll do this one.
Sure.
So question number 2, when looking at news and due diligence for an entry position, right? What type of analysis does JW prefer, fundamental or technical? And here's his answer. So technical number 1, which I also agree with that. Fundamental news can sort of be a pump trap, in my opinion. But then fundamental. Fundamental should be the cherry on top for him. For more conviction. And then the example that he gave was Tesla technically set up for long entries and battery day. It just helps for an explosion and run into the day as well as holding premiums. So I completely agree with that. If you see that a technical breakout is occurring in whatever security you're trading, and then you get fundamental news on top of it, that would be the optimal setup, right? Otherwise, if you see fundamental news, but there's no technical backing, a lot of the time what you're going to get is a gap up overnight or a pump, and then you don't have the support of the technicals to continue upwards, right? You see a short position or a sell-off.
Absolutely. And that's the thing where I think fundamental news can be a very supportive strategy in being able to provide that momentum needed to break out of a pattern, right? So that's one of those things where if you have your technical foundation already established, then you can use news to your advantage to be able to help you identify when you should actually enter or exit a position, when you should have an expectation for a breakout or things of that nature.
Yeah, I mean, I'm with you right there on that.
All right, moving on to the next question. Our third question was, we said with Hove on away, obviously JW has taken over the reign of the week and managing the official account. We asked him, what kind of stresses have you encountered in the Discord when positions don't go your way, specifically in relation to being the main source of alerts for that time period? And so JW said specifically, it's stressful not only because he's posting alerts for himself, but he's also posting trade for hundreds of other people.
Yeah.
And that's something that you have to think about when it comes to being able to manage an account, manage an alert, is that there are hundreds of people obviously waiting for your replies or responses and also waiting for your, sentiment to your trade, right?
Yeah.
that's one of the things that I think we see a lot, where a lot of people, as a position either works against them or is working for them, right? Let's say something's pumping up and it's starting to move higher and higher. Instead of relying on their own opinions, instead of kind of referring back to their own trading plans, they tend to look outwards towards the initial alerter, towards the person who first showed them to the position to get their sentiment before they even consider their own, right? And that's
Yeah.
something that a lot of people could probably learn from and work on.
Well, I mean, those types of stresses, you can see it when Brovon like makes an alert. So he'll make an alert, right? And then the position will be losing due to just overall volatility for the day, or maybe things aren't going that way. But the position has like 2-3 weeks time. Well, new members will complain and they'll say, well, I'm losing 20% and I'm losing X amount. Those types of stresses can actually influence his own trading, right? He's like, oh man, now suddenly I'm not just losing capital for myself, I'm losing capital for other people. So then he starts to hesitate, and maybe he exits that position early, and then later on it turns out to be profitable, right?
Absolutely. And that's one of those things where I think a lot of people, haven't developed the patience required for some of these positions to play out. Specifically, JW strategies, the ones that he used, profit from patience, profit from time.
Yeah.
And I think we saw a lot of those actually, maybe starting about 2 weeks ago, right before Hovind went on vacation, he went on vacation this last week, but about a week and a half, 2 weeks ago, we would see a lot of positions that in the chats would be losing, and following that, you would see him exit those positions as well.
Yeah.
I mean, I've even seen times where people complain, why didn't you hold this position?
Yeah.
And I know for a fact that if they held it and lost money, they would instead be saying, well, why did you hold this position?
Yeah.
And so it's kind of a lose-lose either way, I think, for a lot of the people who haven't spent the time to set their own risk management, or to at least consider their own risk management.
Yeah,
and
it's one of those things too, where even if you follow an alert from JW or Hovind or whoever, you don't have to exit that when the trader exits it, right? So if I'm comfortable with 40% gain on whatever I invested, that's up to me. If I'm comfortable taking those profits, I'll take them and just move on. If he gets 500% off of it, I'm not kicking myself. I still made X amount of percent on the trade. And then you can justify it in however way you'd like. If you make $1,000 a week or whatever it is, depending on your area, that it took someone 40 hours to make that, right, at minimum, and you made it in a couple trades. So you can always justify whatever gains you do make. You just have to learn to do that and just accept that I'll make minimal here, and then when the big opportunity shows up, then I'll try to capitalize on that. But not every opportunity can be a big one.
Right. And I think another thing that maybe Jumbo could touch base on a little bit is more of what his strategy is behind the accounts as well. Because you see a lot of times where, Hovind's consistent with, a 2 to 4%, and then he kind of shuts it off.
Yeah.
It's a steady grow. He's using the trading side for a long-term growth on an account. And you can see the historical, results from 25K to 250 in less than a year.
Absolutely. And it's one of those things that kind of loops back into waiting for the right moment. A majority of the profits are not being generated in, the plus 100, the plus 200, on the smaller trades. They're being generated when we're waiting for, a specific technical breakout of some sort, a specific, expectation timeline for a very likely to occur trade.
Mm-hmm.
And then we're using a little more of that capital, a little more of that risk to then engage in those trades. And that's when you'll see things like, some of in the official trading account, some of the recent examples that come to mind are like the bigger Tesla trade, there's multiple spreads and multiple naked calls being kind of layered over the same movement in different positions. And another one that I can just think off the top of my head is Amazon specifically.
Yeah.
When a couple of weeks ago, we were calling for that bounce higher. We were calling for an expectation on a rebound, and for a couple of weeks, Amazon was not only consolidating, but just kind of lagging behind the rest of the tech sector. And so at that point in time, as we were on our run up to all-time highs in SPY, we knew that when that catalyst occurred for Amazon, whatever that catalyst might be, it would initiate a very large catch up to the rest of the tech sector, where it would, experience these really, 300-point days or something crazy like that.
Yeah.
And that's where, positions again are being layered and profits are being taken, new positions are being added, we're rolling, and we're kind of playing those same movements for the length of the movement. And then when that's not happening, when we have weeks like this, then we're trading small. We're making small revenue, growing the account slowly.
Yeah. It's a good balance of both, right?
Yeah. Just to finish up on JW's question, his third question, he was saying that specifically one of the things that he wanted members to notice was that, although the week has been choppy, the positions as alerted were taking care to be considerate of proper risk management, so that we ended the week profitable, even though this market was kind of whipsawing for a lot of those days. And one of the things that he was saying specifically was that he's very happy that a lot of the members have been messaging him that they've been able to participate in positions. Also, that some members who might not have previously been exposed to his trading style are kind of getting some exposure to that. And so I think that flows very nicely into the next question, if you want to take it on.
Yeah, sure. So question 4 was the one about multi-leg strategies. And basically how JW got his background, what about multi-leg strategies appeals to him versus the traditional, I'm going to buy straight calls and straight puts, right? So his answer there is multi-leg strategies generally take a lot of time to truly understand, and lots of experience, not just theory from reading how they work, but also knowing how to execute, right? So the first thing that people need to understand is the basics of spreads before going into two plus leg strategies. So that's where you get your 2, 3, 4, your iron condors and your butterflies. He's been trading options for 3 years now and almost on a full-time basis. So when you're jumping into multi-leg plays, the thing is you want to take your time and you don't want to over risk your capital. So take your time to learn it, understand it, get the spreads down correctly, and then through that you'll gain experience and you'll feel more comfortable with trading those multi-leg strategies. And once you do, he says they open up a huge new world for you, right? Because now you're not limited into just two sides of every position.
Absolutely, I agree 100%. I think that's the thing where, some people try to go 0 to 100, but you can very easily be able to participate in a very basic debit spread, a very basic credit spread. The things that you could even do in a Robinhood account if you don't have a regular margin account. And, you can build from there after gaining experience with the basics of spreads.
Another benefit to spreads is, let's say you want to buy a straight call or straight put for earnings on Amazon or a massive large cap company, right? So you're looking for one contract to pay, let's just say $2,500. You can get that same spread positionally going in the direction that you would want for a fraction of that cost. Now, granted that your upside is going to be limited, but so is your downside. So you have less of a chance of pulling in 1,000%er, but you're risking less to have a higher chance of hitting any sort of profitability. And then even if your IV crushed, it's going to be minimal compared to if you were just in a straight call or straight put position.
Absolutely. I mean, a recent example to look at is for this Tesla movement. One of the strategies that we looked at was bull debit spreads, right?
Yeah.
Where we're able to avoid what are these very large premiums and still participate in the same movement. And so
Mhm.
that's the kind of thing that if we're looking at, the alerts specifically, both Hovan and JW were able to take advantage of this Tesla movement by initiating debit spreads, lowering their capital,
Yeah.
lowering their exposure to a lot of the volatility that Tesla is experiencing, especially today when it kind of chopped up and down a couple of times, and being able to play that same movement.
Yeah, another complaint that we kind of see that kind of ties into spreads is, oh man, my contract is losing so much to theta, to time decay, right?
Mhm.
If you want to avoid that, especially during chop markets, get some iron condors. They profit from time. So it's literally the inverse. You're hoping that there is no price action and the price stays relatively within a range, and then every day you'll get an X amount of percentage on top of your position if it stays within that range.
Absolutely. And I mean, that's one of the things that you could have looked at for today specifically. If you had the foresight to understand that Tesla would be trading within a range,
Yeah.
you can very easily, profit from some 0-day contracts or, contracts that are going to maximize this pin for the close, right? Tesla they closed up 18 points
Yeah.
after jumping higher all the way, we had a high of what, 451 today?
Yeah.
Pulled back. So, something like that where you're kind of trading sideways, aside from some movement, you might want to look into some of the more advanced strategies instead of playing a straight up naked call put.
Yeah. Okay, well, I think that covers all of the stuff for JW. I know we had one more question, but it kind of tied into the spreads and experience question. Um,
Absolutely.
so JW, thank you for all the trades this week. It was some dope shit. It was different for all the members, so that was pretty cool, and it exposed a lot of people to different strategies that they normally wouldn't have considered, right? So from there, do we want to move on to Juicy?
Sure.
You want to take it off?
Sure, why not?
All right, so tell us a little bit about yourself. What's your trading background? How did you get into trading, and how did you join the Discord?
So my trading background is purely equities, long term. Been investing since about 2011 or so.
Mhm.
Um, I stumbled upon JW or J&M on Instagram one day and just started looking at some of the past results. Then the I joined the subscription, but didn't trade until July. So I missed all of those profits potentially, but it's okay. I just wanted to kind of get a good idea of what kind of trading alerts were being done as far as that goes. Also, chart analysis, and then I didn't actually trade too much even in July. I first did a couple educational classes with Jumbo,
Yeah.
and really beneficial just because from a long-term standpoint, just pure fundamental looking at valuations, it's now switching me from actually reading financials to where when you trade, it's technical. So the technicals aspect of it has just brought a whole nother thing to my whole repertoire, I guess. um, but yeah, learning just going from beginner to intermediate to advanced and then going into the fibs with Jumbo was able to like kind of boast my whole overall technical side.
Mhm.
And I've started understanding it a lot easier and have had some pretty good breakouts just from understanding technicals. Um, I've sent some charts to Jumbo in the past, but I think most recent one was the DraftKings breakout, and we talked about it on the chat as well. And that was actually one thing that you could combo in with news to pump it the day that they announced the partnership.
Right.
So on a, I'll let Jumbo take the next question, but this is a little part 2. On a scale of 1 to 10, how would you rate Jumbo's course? And would you recommend it?
Oh, you said Jumbo take it. Jumbo can rate himself however he'd like. On a scale of 1 to 10, probably a 9.
Awesome.
Awesome. Thank you.
Sorry, Jumbo. You don't get a 10 because we're always 10 minutes late.
That is true.
But no, Jumbo he's really flexible with the times, and especially if you have a lot of questions, he'll answer basically all of them.
All right,
And he helps. Go ahead.
No, finish.
Oh, yeah, and he helps really like with the technical side, understanding pivot points and support and resistance areas. Because once you can understand that, that's when you can understand what range you can actually scalp between, whether it's on, a 5-minute daily or on a 15-minute or on a week long. Those support and resistance, identifying those correctly and being able to scalp on those can just add to your account for when there is a bigger possible breakout move.
Absolutely. And I think that's actually something that we're going to loop back to later. We're going to talk a little bit about scalping for today's Q&A.
Yep.
And that's going to be our main focus on the Q&A today. But my question for you is, obviously you've kind of dabbled in technical analysis. You're a little bit beyond a beginner, but you're not an expert by any means, and I wouldn't say I am either. But one of the things that I've noticed is that generally you're able to maintain a very, analytical standpoint of any play that you're trading. And you have a very well, I would say very well adjusted emotional balance when it comes to trading. How did that work out for you? How did you develop that ability to kind of be able to take emotions out of the picture?
So it's really from my background. Back in college, we used to bet sports and advise on sports. And growing up, I was always a fan, but once you start betting on sports with actual dollars, you can't just be married to your team because that's a recipe for disaster.
Yeah.
And that's why I was bringing up the point of people being married to certain companies, because people love, whether it's Apple or Tesla or Roku, whoever it is, they've always, like, from the beginning, that they've made so much profit on them that they feel that, okay, this is a sure thing. And it's not always that way.
Right. Well, I would say the one exception is that Jervon is definitely allowed to be married to Tesla. He gets that one. That's it.
He can have that one.
That definitely is. He literally built an empire from Tesla. Tesla should be paying him money.
But yeah, it all came from the sports betting discipline side, because you have to money manage each play you do. You can't always, let's say I had $25,000. I can't say I'm going to go bet 5 games for $1,000 a piece, because it's just too much percentage of your bankroll. And that's the same thing I do with trading as well. So sometimes I'm only going with 1 or 2 contracts, but then on technical breakout plays, I'll be a little bit heavier just because I feel more comfortable with it.
Mm-hmm.
So there's a lot of money management that needs to be involved in there.
So you're saying your background was in equities and just overall value investing. What kind of advice would you have for someone who wants to build a long-term portfolio, but they don't have like a high amount of capital to buy Amazon or Tesla or things like that? How would they go about building sort of a growth portfolio with just shares?
So if they're trying to dibble and dabble into Amazon and Tesla, we talked a little bit about yesterday, and fractional shares is always one way to go. Just to have kind of skin in the game in those companies. One thing I look for in a company is, especially in today's world.
Yeah.
Something tech related with a minimum of 4 billion market cap and with potential revenues above $1 billion. Those are kind of just standard that I look at whenever I'm looking for a company long term. Some things that I look for is also what percent of the market can they capture as well. When DraftKings IPO'd, I went pretty heavy on them. I went pretty heavy on this SPAC company right now called FMCI as well. And those are just because DraftKings had already had a big name in daily fantasy and whatnot, and I knew how that whole system works. It's basically me investing in the book or in the house. And eventually they'll get to a point where their revenues will just outpace any of their marketing that they're doing. FMCI is a food-based company that will compete with Beyond Meat. One big thing that really got me was before they even announced when their IPO is, their year-on-year revenue growth was like 96%. So when I see a company able to grow and expand and then they're going public, it's only just going to bring more brand awareness to them, and which will bring more shareholders to increase that price as well.
Cool. All right, Jumbo, what do you got?
All right, so then I think the other question that I had wanted to ask you specifically was, in general, a lot of people, when they first start trading, trouble identifying the types of, trades that are ideal for them, establishing a trading plan that factors in risk management. How did you go about those? Was it kind of trial and error, or was it something that you kind of set to yourself before you even, started becoming more active?
So as far as like risk management goes,
I would say so, yeah.
yeah. So when I first started trading, I actually was pretty bad as far as risk management went, because I would jump into a position and didn't have an exit plan on it. So, I mean, basically I would see gains go up on my Thinkorswim system, and I'm like, oh, this thing's going to keep going. And next thing you know, it oops, because there was a sell-off or whatnot, and the premiums are gone. So then I started realizing that, okay, when you're trading, it's not the same thing as long-term where you're buying into it and just slowly growing it. It's purely on get in and at a certain point be happy with it and get out. And so I started out with the 30% stop loss, and then the 80, 100% that's just the standard recommended in the Discord. But now, especially like when I'm scalping, sometimes if it's even just 25% and I go a little bit heavier with 10 contracts on it, I'll get in and out within 5 or 10 minutes and not even look back. And the stop loss, the same thing. Stop loss, I usually set at about 20 or 30 cents below, depending on how much premium is on that contract. And before, I actually didn't have like an accurate way of doing stop losses. So I would just monitor and sell as that, as basically premium started to go down on it.
Nice. So everything you just kind of touched on there leads us into a question that we have for our Q&A segment later on, where scalping in general is, I would say it's a more difficult skill to learn with trading, right? So what you want to do when you scalp is you want to jump into a position, make X amount of percent, and then hop out and not look back for the rest of the day like you were talking about, right? So how would you go about looking for entry and exit points in a scalp for the day? What are some things you look at there?
Well, especially like opening day, or when the market opens, I generally won't jump in on something just because there's going to be a lot of volatility at very open, whether it's on the upside or downside. But either way, if it's on the upside, most of the times in today's market, you're going to have some sort of pullback.
Yeah.
And I want to be able to establish at least like a bounce zone before actually just jumping in. Buying the dip, I don't do that much for long swings. It's more of I'll buy a dip, especially like in late July and early August, there was like a trend with SPY where SPY would just dip and rip the rest of the day. And once I started seeing that for like a day or two, or even 3 days, it was like, okay, this is something to jump into as far as, same day contracts or even 2 days out on SPY. And I would buy into them at that low or just above the low and ride the momentum upwards.
So that's
As far as identifying it,
yeah.
there's some pivot studies that I'll use to just kind of help me gauge where a potential bounce could be. But then I also go back and backtrace to like 2 days before, 3 trading days before, just to see where those levels were as well.
Cool.
So I think now that we're on it would be a great time to continue talking about scalps and kind of transition to that part of the Q&A.
Sure. So I'll go ahead and read off this question. I'm going to butcher your name, dude, so I apologize ahead of time. Tarora, I'm gonna go with that. But yeah, he was saying that he gets faked out too many times, or she. Most of the time they catch them at the top and they're not sure how important it is to look at level 2 identifiers in parallel while scalping. So with scalping, you don't want to get faked out, right? That's because depending on if you're scalping for the day and you're trying to play that momentum, if a position reverses on you, it's going to lose money dramatically quickly. Like it's just going to be bad for you. My advice on scalping is what you want to do is buy low and then you want to sell high. But realistically, it kind of touches on what Juicy said, where you want to identify a range, right? If you're scalping, if you jump into the market on a position in the first 30 minutes, if you're wrong, all that IV is going to go against you and the price action is going to go against you. So you're going to lose money on theta, you're going to lose money on your delta when it moves against you, and then the IV 45 minutes after open is going to be significantly lower than it was at open. So that's one type of scalp that you want to avoid unless you have capital to jump into, right? Because it has a high percentage chance of not going your way. The best time to scalp is what Jovan says. So he doesn't enter into a position unless it's like 30, 45 minutes after market open, right? The reason for that is that volatility isn't as high. You have a general idea of how the price action is going to go on a specific security. So I would identify the range. I would be patient for my entry and wait that 30, 45 minute mark. And if you see that, let's say Roku, for example, opened at 160 and then it went down to 155 and now it's trading at 159, but it has a high for the day of 165. You could play a call option there looking at the support and resistance levels. So if you see that it's bounced off 156, 3 times in a row, it's a pretty safe bet to go ahead and grab some calls at that point and play the bounce. What do you guys think?
I would agree, and that's one of the things when it comes to how you want to establish your scalping strategy, which one that works for you.
Yeah.
One of the most common ones is going to be trading within levels, right? And so that's trading within range. That's different from, if you're trying to swing a position or go long on a position where now you want a break out of range. On a scalp position, you can trade within the same levels time and time again and, kind of let that trend establish itself. And so, kind of one of those things that you were saying where Jervon recommends not going into it thing 15 to 30 minutes until after the market opens. The reason why is because you want to establish a trend first, right? If I'm waiting 15 minutes until after the market opens, I get 3 5-minute candles out of that. And I can kind of, be able to ascertain exactly where we might go first.
Yeah.
And so, if I'm looking at market open, 30 minutes passes, and I see that we're approaching a level from the day prior or from the day after. Now I can, exactly where I might want to buy the dip, where I can expect a bounce, and where I should enter my scalp based off of not only, the strength of the trend, the size of that trend, but also specifically, where I'm looking for that bounce to occur. Right. And so that's a little different depending on whether you want to trade within a level or you want, to trade within a breakout or what type of strategy you're going to employ.
Yeah.
I think one thing that, I mean, this is how I feel about scalping. Your scalps should not turn into swings. If your scalps turn into swings long term, not profitable, in my opinion.
Yeah.
Because usually, especially like if you're scalping, let's say you're scalping Tesla, most of the times you're going to be buying something pretty heavily out of the money just for that price movement. And holding long term, I mean, holding overnight on that, your scalp go to zero immediately.
Yeah.
Right. And that's one of the things is that if you're entering into a scalp play that you intend to be a very short-term hold, you don't want to hold it beyond your initial time frame, right? And that's this thing that a lot of people suffer from is they try to turn a scalp into a swing, right? Generally, if I'm scalping, I will give myself a time frame equivalent to whatever time frame I'm analyzing on the chart. And so the scalp that I intend to enter is on, a 5-minute time frame or a 15-minute time frame, etc. Then I'm establishing, my time frame in multiples, and I'll say, okay, for this scalp, I'm going to, if I'm looking at a 5-minute, I'll give myself 5 to 6 candles, right? Where I'm looking at maybe 25 to 30 minutes of movement. And that's my maximum, right? And that could be based off of previous movements in the day, how long those movements could take to occur, and my expectation for that upcoming movement. But one of the things that a lot of people who start scalping tend to do is they'll kind of enter the scalp and they'll be in it 2-3 hours later because they're bleeding or because it's chopping sideways, and then not scalping.
No. Yeah, it should not be I'm gonna jump into this position and then hold it for an hour, right? So when I jump into a scalp, I'm looking to be out of that position within 15-20 minutes tops. Another thing that can help you kind of judge what to scalp is overall market patterns, right? So one thing that we all know is there is a lunchtime dip. Like that is a real thing where certain securities will dip every day during lunchtime. Amazon is one of the biggest ones that does this. So what I would look for is 10 minutes before a lunch, I would look at the price action and see what the high for the day is and then what our low is. If we're at the high of the day heading into lunch, I feel pretty comfortable buying a almost in the money put for a slight dip and then sell it 5-10 minutes after. It's not a guaranteed pattern, but if the setup is there, it's one you want to capitalize on. But what I would kind of just like to ask everyone else is when you guys are scalping, do you try to trade far out of the money options for that value boost if a pump goes your direction, or do you trade slightly in the money and take the guaranteed profit at a higher entry cost?
Do you want to go first, Juicy, or should I?
I can go first. So I usually will take more of the out of the money option. I tend not to go too much in the money, especially on a scalp. Most of the times, if I'm scalping, though, it's something with more volatility, one of the bigger caps. Not really going to be scalping AMD because their price movement's not as much. But as far as like Nvidia goes, Tesla goes, Amazon, I'll scalp those just because I can get a good movement in between a certain time frame. Especially with Tesla, and this is something I picked up from Jumbo as well, was the first class he showed me was, I don't know if you guys remember the day in July. It was right before 4th of July weekend, where Tesla just ramped into day, into end of day. And Tesla had, I guess, these 3,000 calls or like 2,500 calls that were like $3 a contract. And they went up to, I think they went up to $6. They came back down to $3. They went up to $6, came back down to $3 about 4 or 5 times in that day. And Jumbo told me about this on the class, which is why I was more interested in getting into the out of the money scalps. So with Tesla, like I'll look for, especially like on a Friday, I'll look for something more out of the money just for that quick pump up, dump, and call it a day. And this is usually within like a 15-minute time frame at most.
Absolutely. So I think to jump on that and kind of talk a little more insight into how I, approach mine. You're able to more easily manipulate some of these more volatile, higher cap stocks, specifically ones like Tesla, where that's one of my favorites to scalp. And one of the ways you can overcome some of those more expensive contracts is by being able to manipulate some of these really quick movements on, weekly expirations, right? So I'll give you an example. I'm just trying to see what strike I had here. Completely forgot. So yesterday, a Tesla 445 call expiring today, the 18th. I ended up buying in at around $3. And this morning, when Tesla gapped up, that call was actually almost in the money or at the money, and gone up 300% profit from $3 to $12, right? And so now that's an overnight swing. But here's the catch: that same play moved tremendously intraday using that same day expiring call. And so, if I go out a little further out of the money, and maybe I was trading, a 450, 460 strike during this morning's pump up to 451, I can experience a similar profit gap on a much shorter time frame without needing to actually swing a position of that type. Now, obviously, both of those trades are going to be very high risk scalps because I'm playing same day expirations. But on the opposite end of that, you can, as long as you're, playing within your risk limitations, gain very quick and very strong movements in the underlying. And so that's like one of the things that he was going back to, those 3,000 calls, where you can kind of flip something that's out of the money, or 100% profit multiple times intraday, especially on some of these larger cap stocks. To expand on that, what kind of scalps would you look at if you're trying to get something that's a little less risky? One of the other strategies that I might recommend playing is getting something that, for example, on Monday, a Friday expiration is going to be a little less risky. And as we approach today, the 18th, any 18th expiration is obviously going to be much more volatile. But back on Monday, where I have maybe 4 days until the expiration, that's something that I can use to my advantage while scalping. And if I wanted to get a little more, of a slower movement in a scalp, then I could go out to next week, which would be the 25th. And so then from there, instead of trading out of the money strikes, that's when I tend to transition to some of the closer strikes. Because now you're purely playing for, obviously time isn't a factor. You have farther out. You're not playing a same day expiration or anything of that nature. So you don't have to worry that much about data decay. And now you're just looking at either, delta movement or volatility crush. And specifically, if you can establish a trend and a movement that you can kind of trade in that same range over and over, then you're going to become, I'd say, more consistent at it and a lot more familiar with those movements. And so, for example, one of the strategies that I use on Tesla specific when I'm trading something that's not expiring same, something, this Monday the 14th, if I was trading something that expired this Friday or even next week on the 25th.
Yeah.
And I'm trying to go, a little closer to at the money, depending on how the strikes are working. And I'll usually do a 30-30 rule, where instead of our traditional stop loss at 30%, take profit at 100%, my risk loss is going to be much tighter, and so is my profit target. Where
Yeah.
on a 30-30 rule, I'm looking for, 30% profit or 30% loss, and I'm out of that position in a shorter period of time.
Yeah.
And usually those types of trades are, for me, occurring on a 5-minute time scale, on a 5-minute chart.
Mm.
So I'll give you an example. What I often do if I'm trying to scalp Tesla earlier in the week is I'll look for a $10 contract, right? Which is probably going to be, a little more expensive for some of the smaller accounts. But, provided within your risk limitations, this applies to me specifically. I look for like a $10 contract.
Yeah.
And so my 30-30 rule is, either I'm exiting that position with 700 in my pocket, or I'm exiting that position with 1300. And it's a very quick and set trade that I can, do over and over again throughout the week, just by trading a little closer to the money, maybe going a little more expensive on my contract price, but then lowering my expectations and profit target, and also tightening up my risk as well.
So one thing that I look at, like you were saying, with same days, those are extremely high risk, right? That's one where if you're not identifying the correct support and the correct resistance, and if you're going out of money on a same day, there's a high chance of failure unless you catch it when the volatility is high and the direction's going your way. Like, for example, today, I looked at Apple and at Tesla. I missed the Tesla call entry because I saw it was at 437, I think. And it had kind of bottomed out, and we were starting to go up towards that 451 run end of day. So I ended up missing the entry there, but I was able to ride Tesla down because I saw that it hit that 451 and then automatically dropped, right? And then it was trying to bid back up above 449, but failed multiple times. I was like, okay, at this level, I feel pretty confident in a 445 put because that was the next available strike on the put side. So once I get into a trade like that, like Jumbo was saying, I'm not looking for 500% or, just an insane percentage gain. I am looking for 20 to 30% and I am out. If it hits my stop loss target when I enter the position, I will automatically call it quits. It's not one of those things that I really let go above my stop targets, right? Unless I am fully comfortable with losing whatever I invested into that security. Today, another good target that hindsight 2020. But if you look at Apple on the 1 minute, it tested 108 a few times. And then heading into end of day, it couldn't break over 108. So I felt extremely confident in grabbing those 107.5 puts. And my entry was 0.12 and I exited out at 0.15. If you grab 10 contracts there, that's low risk and that's a decent reward. But those contracts ended up going as high as 0.8, I think. So that could have been an easy 400, 500% gainer. But when you're playing scalps on same day, you don't want to have that greed issue affect you, because if it does, it is an extremely easy way to lose money. If you average down on a same day scalp, you're basically begging to lose, in my opinion.
Absolutely. Absolutely. I think that's one of those things where, your risk to reward is so much higher that your trading plan needs to be that much stricter, and your approach needs to be that much more, set, where you can't really wiggle room to kind of be adjusting your position.
I think you've got to have a whole separate set of rules for when you're scalping. You can't really you can't follow swing rules at all with scalping. You have to have your own predictated rules for scalping. And I mean, even just that 0.12 to 0.15, that's a good gainer for a low contract, especially because you're probably not just buying one of those. So the profitability, once you understand scalping, will take your swing trading account or your full overall account a lot higher.
It's one of those things too where, you know, if you have a margin account and you're under 25,000, you know, maybe you don't want scalping to be the strategy for you. But if you're limited by that 25,000, go make a cash account, you know. You can make as many day trades as you have capital. So if you're looking at scalping on a cash account, I think once you get the basics down, you have a lot more opportunity for incremental gains throughout the day, right? If I make 10 trades and I make $50 on all of them in one day, sure, that's a lot of work, but that's also somebody's 40-hour check. Like those are the types of skills that you want to develop with a smaller account.
Right.
Absolutely. Absolutely. And that's the thing too, is that, you know, we're talking about some of the more, you know, volatile, you know, higher cap stocks where your risk to reward is that much higher. But this is a strategy that you can employ on a smaller account, and you can try, you know, to become more situated in, or kind of add it to your repertoire, add it to your arsenal through practice day to day. I'll give you another example. One of you said that you wouldn't really scalp AMD.
That was me. Yeah, I wouldn't.
So, I didn't say it, but that's also me.
So the funniest thing is that, like, back, you know, obviously before COVID and everything happened, one of my favorite strategies in terms of scalping was if you got a almost at the money or as close to at the money call as possible on AMD.
Yeah.
It used to, at the time, the contract used to cost like about $1, and it would always be a weekly expiration. Find an at the money contract when it's like $1, and when AMD moves up $1, which is very likely, that contract would go up 50 cents.
Yeah.
And so I used to, without fail, maybe every day of the week, buy an AMD contract, get that 50% profit in like an hour, and then sell it. And I would just constantly go from $1 to $1.50, $1 to $1.50. AMD would go up $1. I'd buy the new contract, which was now $1, and wait for it to go to 150, sell it. Buy the new at the money contract, wait for it to go to 150, sell it. And so, like, you don't need to be trading $1,000 contracts. You can do this on a much smaller scale.
Oh yeah, I mean, you can do it on KO, like Coca-Cola, all the time. It has, you never want to buy out of the money when you're trading KO, in my opinion, because it just doesn't move that much. But if you're trading at, let's say the price is $49.80 at open, if you buy a 50 call, there's a good chance that that's going to be profitable right out of the gate, because it's going to be a small movement, and chances are it's going to have a high delta. And once that volume kicks in, you're golden. AAL is the exact same thing, right? If we're trading at 1381, if you grab some 14 calls at open and you let it jump up 5-10 cents, those contracts are going to gain value, and you can just flip them and scalp them right there.
I think one of the big pieces that we got to take away from what Jumbo said was, if you notice, every time that he bought those AMDs, he wasn't actually going to, oh man, what if I held it longer? What if I held it longer? And that's the true definition of scalping, is you get in, you hit it, you get out, rather than, oh, I could have had this on top of that. And I mean, it's all in hindsight too, but that's where a lot of traders, I think, make mistakes, is that whole, oh, it could have been this, it could have been that. And that's where they'll end up getting burned more on scalping.
Yeah.
Really. And to expand on what you're saying a little bit too, is that a lot of people get hung up on account value, right? On the number in your account balance. They get hung up on the number that you're red or green on a day, and they let those numbers influence their individual trades.
Mm-hmm. Yeah.
Right? And I'll give you an example. If you have, you know, all right, let's say your account's $10,000, and you have a red day, so now it's 9,900, and you're in a scalp, that is profitable by 50 bucks. Now you're at 9,950.
Yeah.
I know a lot of people who will say, yo, let me get those extra $50.
Yeah.
Like, that's me to a T. That's how I am. And it's both.
Yeah, I think we've got to start thinking more of like a percentage base. I mean, it really has to be at rate of return, not about what total dollar profit it was, because everybody's working with a different account. I mean, I'm not going to be working with the same account that Hogan's working with. Simba's not going to have the same account as I am. So
Yep.
it's really got to be what type of percentage returns can you consistently compound together over time to grow something larger. I mean, you've
It's
really got to
also,
treat your trading like business.
yeah, treating it as a business is probably the best way to do it, by setting margins and setting your losses that you're going to take for the day. But then also, it would be a good idea to learn how to remove the emotion out of your trading, right? I know that's like easier said than done, like even for all of us, I'm guessing. But if you're like Jumbo was saying, if you have a $10,000 balance and you lose $100 and you're in a scalp that's profitable by 50, go ahead and take the money. You know, you still have a full trading day of making that back. You don't have to make more than you lost every single day, right? For example, in my case, I took a loss on those Apple 112.5s the other day, and I was livid about that. I was like, oh man, the one time that bounce didn't work for me. So instead of trying to double down and force trades that weren't there, I just called it a day. I was like, you know, I don't need to make that up today. I can make it up tomorrow. And then today I had some profitable scalps that it didn't offset that full loss I had from Apple, but it got me one step closer. So now next week, I'm going to look to just incrementally make a few more dollars, and hopefully that loss will be completely gone, right? And then I will be above that. So you don't have to force trades to make back any sort of money you lost in a day. There's always more time.
Absolutely.
The only
That's
time you run out of time is when you run out of money in the account.
That's true. And you
So
run
that's what you really don't want to do.
Yeah.
And to like expand on that too is that, you know, if you're able to consistently make small profits, that's going to help you so much more in the long run than constantly trying to kind of create these numbers that your account has to reach, or create these profit targets that, some people will see something at like 80% profit, take that profit, maybe 15, 20, 30 minutes later, they're looking back, it's at 100% profit and they get upset. And
Yeah.
that's something that a lot of members struggle with.
Yeah.
And the idea there is that you have to, kind of let the situation tell you what kind of situation it is, right? You can't
Yeah.
change the boundaries of the trade. You have to just either be in the trade or be out of the trade, and unemotionally, analytically, either determine your enter and exit, right? You can't be, oh, I need this 100% profit, or I need,
Right.
right?
Well, here's the thing with that, right? It's being able to separate the short-term picture from the long-term picture, right? $200 a day, it may not improve my week, right? But there are 252 trading days. If you make $200 a day, you just made 60K, bro. You know, that's life-changing money over a year. On top of if you have another side hustle, or if you have a full-time career, right? Being able to separate that and focus long-term gains is where you're really going to start seeing some profit or some benefit.
I agree completely.
Yeah, you need about 350 a day for 6 figures.
Yep.
And on a $10,000 account, even if you just scalped that daily and took the rest of the day off, like, hey, you're making 6 figures within maybe an hour or two, whereas people are working 40 hours a week to do that.
Yeah. I mean, before I started trading, I think my hourly pay for a full 8-hour day was like $280. And then once I was like, oh, I can make this in an hour by trading, I was like, oh,
Yeah.
so what? I was like, time for a career change.
Absolutely. And so what was that number you said? 300? He's like 350?
It's around 350.
So to expand on that too, it's much easier to make, right? 350 times 5 is 1750. It's much easier to make 1750 in a week than it is to focus on making 350 a day.
A day, yeah.
Yeah.
That's when people will focus on, oh, I'm below my,
I'm not there yet.
not there yet. I'm not, I have to make it. I might take on an extra trade or take on some more risk to get to that profit target for the individual day or something like that.
Yeah.
When, on the week, you might be doing fine.
Yeah.
Right. And
That's
so it's
actually
like
a really good point.
Going back to that
Yeah,
long
that is.
picture.
Oh yeah. And
Why not
actually,
focus on the day-to-day movements, but maybe I'll set a weekly goal or, even a monthly goal or something like that. And you can see those much more easily manifest.
Yeah, I started off by setting a daily goal, and then I was like, well, there's just too much stress for me to, try to find the position that's going to pay me this X amount that I want every day. But if I set it to a weekly goal, if I don't see an opportunity on Monday, I won't trade. If I see a big opportunity on Tuesday, I'll throw more capital at it so I can hit that weekly goal and just be done.
yeah, I look at it from a percentage standpoint. It's not really looking at a dollar figure, more of just, okay, I hit 4 or 5%. Like, that's me locking in because the market is a ruthless place and can take away at any moment.
Absolutely. The market
and
shows no mercy.
They don't. Especially when you jump into one of these trades that just, let's say, just ramps from beginning.
Yeah.
A lot of people are, sitting there holding it like, okay, this is going to go crazy. But those are the times that what I've noticed is the market will throw a curveball or a knuckleball and it's just sell off, especially when it feels like it's about to go through the roof.
I mean, that's the thing, right? The market does whatever fucks the most amount of people. So what you want to do is manage your risk and hopefully end up being profitable on that side. But hey, I'm thinking that we call it a day for today. What do you guys think?
Yeah, I think this is a good point to wrap it up. And obviously, for anyone who's still watching, if you had questions that we didn't get to or anything that we talked about today that you want us to kind of explain in further detail, we're always available by DM. Feel free to reach out to us. And, there's always next week for our Q&A sessions again.
And this will be posted on YouTube either tomorrow or Sunday, depending on we can get it all rendered, edited, and time-stamped. So definitely check out the YouTube channel, like, comment, subscribe. And if you have any questions, always DM us. We're always down to chat.
Thanks for having me, guys.
No problem, man. Thanks for coming on.
Y'all have a good weekend.
All right, you too. And see everyone next week.
Take it easy, guys.